Want to transform your trading game and build serious wealth? Here are the top 5 strategies you need to know. Today, we're diving into powerful trading strategies that can elevate your trading approach and boost your gains. These techniques are practical and can be applied immediately, so stick around for actionable insights that could change your trading journey. Don't forget to hit subscribe and stay tuned for strategies that could make a big difference in your trading success. Alright, let's kick things off with a strategy that's about as fundamental to trading as it gets: trend following. You often hear the phrase, "the trend is your friend," and for good reason. Trend following is all about identifying the direction the market's heading in and riding that wave. Think of it like this. Instead of trying to time the market perfectly, you're basically jumping on a moving train and riding it until it shows signs of slowing down. The key here is identifying a strong, established trend, not just some random price fluctuation. Moving averages are your best friend here. They smooth out price data to give you a clearer picture of the trend direction. Look for stocks where the price is consistently trading above its moving average for an uptrend, or below its moving average for a downtrend. The longer the moving average period, the more significant the trend. Another powerful tool is trendliness. These are lines you draw on your charts connecting the lows in an uptrend or the highs in a downtrend. They act as support and resistance levels, and breakouts from these trend lines can signal a potential trend continuation or reversal. But remember, patience is key. Wait for confirmation, manage your risk, and let those profits run. Remember, the trend is your friend, so choose your friends wisely. Now, if riding long-term trends sounds a bit, well, long-term for you, then swing trading might be right up your alley. This strategy is all about capturing those juicy price swings within a larger trend, buying at dips and selling at peaks, kind of like riding a swing, hence the name. Swing trading is perfect for those who like to be a bit more active in the market, who enjoy the thrill of timing their entries and exits to maximize profits, but without the constant monitoring required in day trading. So, how do you find these lucrative swings? Technical analysis is your best friend here. Look for chart patterns like head and shoulders, double tops or bottoms, or flags and pennants. These patterns often signal a potential reversal in the short term, giving you the opportunity to buy low and sell high. Another powerful tool is technical indicators. Things like the Relative Strength Index, RSI, or the Moving Average Convergence Divergence, MACD, can help you identify overbought and oversold conditions, signaling potential entry and exit points. Now let's say you're looking at a stock that's in a long-term uptrend. You notice that it's recently pulled back from its highs and formed a classic bullish flag pattern on the chart. The RSI is also showing oversold conditions. This could be a perfect opportunity for a swing trade. You might enter a buy order near the bottom of the flag pattern, with a stop-loss order placed just below the pattern support line to manage your risk. Your target could be the previous high or even higher if the momentum is strong. Master this timing, and you'll be swinging your way to trading success. Before we dive into the next strategy, here's something that could give you a serious edge. Imagine if you could shortcut your way to trading success without spending years learning the ropes. What if you could instantly access high-quality Forex signals from top traders with a proven track record? Our Telegram channel offers exactly that. Daily Forex signals with a high win rate, designed to help you make smarter trades with minimal effort. It's like having a top trader in your pocket. If you're ready to fast-track your trading journey and start seeing results now, just click the link in our YouTube bio to join our Telegram group. No long learning curves, just actionable insights right at your fingertips. Chapter 3. Strategy 3. Fast and Furious Conquering Day Trading. Buckle up, because we're about to enter the fast-paced world of day trading. This strategy is not for the faint of heart. It's all about speed, precision, and making quick decisions to capitalize on those minute-by-minute price fluctuations. Day traders live and breathe volatility. They seek out stocks that are moving, making multiple trades throughout the day to scalp small profits from each trade. They're in and out of positions quickly, often closing all their trades before the market closes, hence the name. Now, before you dive headfirst into the day trading arena, it's crucial to understand that this strategy requires a high level of skill, discipline, and risk management. It's not about gambling or chasing after every little price move. It's about having a solid strategy, sticking to it, and knowing when to cut your losses. So, what does a day trader look for in a stock? Volatility and liquidity are key. You want stocks that are moving with high trading volume so you can easily enter and exit your trades without significantly impacting the price. For example, a day trader might notice a stock that's showing strong pre-market momentum, with high volume and a surge in buying pressure. They might enter a long position at the market open, hoping to ride that momentum for a quick profit. Day trading is a high-risk, high-reward strategy. It's not for everyone, but if you have the time, the discipline, and the stomach for volatility, it can be a potentially lucrative way to trade the markets. Chapter 4, Strategy 4, Playing the Long Game with Position Trading. Now let's shift gears from the fast-paced world of day trading to the more patient and strategic approach of position trading. This strategy is all about playing the long game, identifying long-term trends, and holding positions for weeks, months, or even years to maximize profits. Position traders are like the marathon runners of the trading world. They're not concerned with short-term fluctuations or market noise. They're focused on the bigger picture, on identifying those fundamental shifts in the market that can lead to substantial gains over time. Fundamental analysis is a key tool for position traders. They dig deep into a company's financials, its industry, its management team, and its overall market position to identify undervalued or overvalued stocks that have the potential for long-term growth or decline. Technical analysis is also important, but it's used more for timing entries and exits, and for identifying those key support and resistance levels that can help maximize profits and minimize losses. For example, a position trader might believe that the renewable energy sector is poised for significant growth over the next decade due to factors like climate change and government policies. They might identify a leading solar panel manufacturer that has strong financials, a solid track record, and a competitive advantage in the market. They might enter a long position in this stock, knowing that the road might be bumpy in the short term, but confident that the long-term trend is in their favor. Position trading requires patience, discipline, and a long-term perspective. Play the long game, stay focused on your goals, and you'll be amazed at the results you can achieve. Chapter 5, Strategy 5, Unlocking Profits with Arbitrage, Finding Your Edge. Alright, let's dive into a strategy that might seem a bit more complex but can be incredibly lucrative if you know what you're doing: arbitrage. Now, arbitrage is all about exploiting price discrepancies between different markets or assets. Think of it like this: you walk into a store and find a pair of shoes on sale for $50. Then you walk across the street to another store and find the exact same pair of shoes selling for $100. You buy the shoes at the first store, walk back across the street and sell them for $100. You've essentially made a risk-free $50 profit by exploiting the price difference. That, in a nutshell, is arbitrage. In trading, arbitrage can take many forms. One common type is triangular arbitrage, where you exploit price differences between three different currencies in the foreign exchange market. For example, let's say you notice that the euro is trading higher against the dollar is trading higher against the yen, and the yen is trading lower against the euro. This creates a triangular arbitrage opportunity. Arbitrage opportunities can arise in various markets, including stocks, bonds, commodities, and even cryptocurrencies. The key is to be able to identify these discrepancies quickly and execute trades swiftly to lock in your profits. Thank you for watching. We've covered 5 powerful trading strategies today, each offering unique advantages to enhance your trading game. Don't forget to like the video, subscribe for more content, and comment below with your favorite trading strategies or any questions you have. Stay tuned for our next video where we'll dive into even more trading insights.